Okay, in this chapter, we're going to look at doing a lot of journal entries and talking a little bit more about our intangible assets, such as our patents and copyrights, and how to record those as well as amortize that. So let's take a look at this first one where we talk about some research and development costs, and then we also include a patent and the legal costs associated with that. So the first thing we want to do is prepare the journal entries for both 2021 and 2022, where we spent $170,000 in research and development costs. Let's start there. We need to record first that piece of it, and that's just an expense. We're going to record that research and development expense. And that's $170,000. And we just go ahead and credit our cash for that. Then we move on a couple more sentences. It says we obtained a patent on October 1st. That patent had a legal life of 20 years, but a useful life of 10 years. That's the part we're concerned about. And it had legal costs of $18,000 related to getting that patent. So we want to record that we got this patent. We paid cash, and that was $18,000. Also, at the end of 2021, we're looking at first, we're going to record some amortization expense in relation to that patent. So we're going to debit our amortization expense and credit our patent. The amount of this is going to be straight line based on the useful life. So we have $18,000 cost that we're going to amortize over that 10 years. But in year 1 in 2021, remember we purchased or obtained it on October 1st. So we are only going to be able to record 3/12 representing those 3 months. So that's going to be $450. Then in 2022, the only thing we need to record is that patent or the amortization expense for that patent. So we'll debit that amortization expense, credit the patent, but that's going to be for the full year. So that's the 18,000 divided by 10, or 1,800. So that takes care of 2021 and 2022. Now in 2023, we spent another $9,480 on the infringement suit. That means our useful life was extended to 12 years. So we need to journalize everything from 23 and 24. So in 2023, first we're going to record that we spent some extra money for this patent. So we're going to increase the value of this patent, show that we spent cash, and that was $9,480. Then in 2023, we have to amortize. This one's going to get a little messy. We still have our amortization expense. We're still going to credit that patent. But now let's look at the amount we're going to amortize. First, in the first part of the year before June, we need to amortize, so from January through June 1st, we're going to amortize that 18,000 straight line, but it only accounts for 5 months. So that was $750. At June 1st through December, we need to amortize the amount that we have left from our original patent. So we're going to find that out first. So we're going to get that 18,000. We need to subtract out every time we credited that patent, because that's going to lower the value that's on our books for that patent. So we're going to subtract out the 450, subtract out that 1800, there we go. And then we're going to add in first, don't forget this part. Subtract out that 750 that we're going to include, but we want to get to the carrying value of this patent. So subtract out that 750 and then add in the new costs that we added. So that gives us our current value of our patent, carrying value. Then we take that carrying value, we're going to divide that now by the useful life of 12 years, but we've already recorded those 5 months, so we need to take this and multiply it by the rest of the year, or 7 out of 12 months, which equals 1190. Then we're going to add these two together to equal our total amortization for 2023, which is 1940. So again, that 1940 is coming from the 750 plus the 1190. And then finally in 2024, again, debit the amortization expense, credit that patent, but now we're back to that straight line amount. No weird things going on here. Just divide that by 12 and you get 2040. And finally, the last little bit of this, coming back up here, they determined that the competitor's product would make this new age piano obsolete and the patent worthless in 2026. It's now 2024, so they have 2 years that left on this patent. So in 2024 and 2025 and 2026, again, we're going to debit that amortization expense, credit the patent, but now we got to figure out how much we have available in that carrying value right now. So we started out with 24,480. We subtracted out of that the 1190, and we subtracted the 2040 from that carrying value, which gives us a total value of 21,250. I'm going to take that, divide that by 2, because I only have 2 years left, and each year is going to be the same amount of 10,625. Now let's look at the second problem where we talk about copyrights. In copyrights, we need to again look at the carrying value, the expected cash flows, the fair value, determine if it needs to be have an impairment recorded, and then also record that amortization on the copyright. So first thing we're going to do here is record if there's any impairment related to this copyright. So remember, for impairments we need to look at our net cash expected versus our carrying value. If it's less, then we record an impairment. Here, our expected cash flows are 4 million. Our carrying value is 4.3 million. Therefore, we have an impairment. The next thing you have to do is determine impairment value. So the impairment value, you compare the carrying value and you're going to subtract the fair value. In this case, we have 4.3 million compared to 3.2 million, which gives us an impairment value of 1.1 million. So first thing we have to do, now that we've determined there's an impairment, is record that loss on impairment. This should be a good review from previous chapters. Debit that loss on the impairment and credit your copyright. All right, now we need to record our amortization expense. We need to do this based on your carrying value. We've just now brought our copyright value down to the 3.2 million because we recorded that impairment, right? So our carrying value was 4.3. I recorded that impairment. Now my value for that copyright is equal to my fair value. So when I amortize, again, I'm going to just record that amortization expense as a debit. I'm going to credit my copyright. And I'm going to amortize based on that $3.2 million. The useful life is 10 years. So I divide by 10, and it's 320,000. And finally, this next thing says that the fair value actually is now increasing to 3.4 million, but we do not do any entry to record a restoration of impairment, so we don't have to do anything for that piece of it. So nothing is done here. All right, let's look at some problems related to these types of questions. Come back to the... So for this first one, they're talking about amortizing, what are we looking? Amortizing a patent. We look at the cash flows, which are $6 million or $600,000 over 8 years. So 600,000 times 8 is going to be 4.8 million. So my cash flow, this is my cash flow. I'm going to compare that to my carrying value. My carrying value is that 4.2 million. My cash flow is greater. There's no impairment. Look at that first. So then I need to, what they want to know is what amount should the patent be carried at December 31st, 1st, 2026. And so we need to take into consideration the amortization for 2 years. This will amortize in 2025 and 2026, and that's going to bring down that carrying value. Luckily, we're looking at full years here. We're going to amortize that $4.2 million over 10 years. And we're going to multiply that by 2. I got to do a little math there. 4.2 million. Divided by 10. 840,000. I should have been able to do that in my head, but I can't. And then what we want to do is take our current value, subtract that amortization, and that's going to give us our carrying value at the end of 2026, which should be that amount. So it should be C. So because there was no impairment, we're amortizing that $4.2 million over 2 years, which calculates to that 8,000 or 840,000. Because they want what the value is at the end of 2026, we need to account for those 2 years of amortization. We subtract that, and we get our current carrying value. All right, let's look at one more here. In this one, they give us some information, and they want to know, what would they record a loss on impairment? First, they obviously would, because none of the options are 0. But we can also say, okay, the cash flows is 1.6. It's less than the carrying value, so there is a loss. So we know that. Now we just have to determine, how do we figure out that loss? Again, the loss is the carrying value which is 1.920 compared to the fair value, which is 1.3. We're going to subtract those, and we should get 620,000. And that should be your answer there. So just as a reminder, we compare the carrying value to the cash flows to see if there is a loss. As long as those cash flows are lower, we can record that loss. And then the loss is determined by carrying value versus fair value. So hopefully that helps. If you have more questions, please let me know.